Today, the April 9th, was a crazy good day for lots and lots of traders. Why? ES almost went up 450 points. At point in time in the morning, it was around below 5,000 mark. It even touched like 4980 and all, even the lows. Even the market opened at around 1480. But after the market moved, after the news, market went crazy. But today, I want to talk about the examples of how the market manipulations happened today, and then let's talk about how those are the really good opportunities for you to enter the trade. Okay, so this is Rob from BuySide Global. Let's take a look at the liquidity zones and the liquidity sweeps and then the market makers manipulations. All right, so if you look at the market here, for me, I'm in Central Time, 8:30. The market opened right here. This is the low of the day, but market moved. But market really made a sideways movement all morning. But when the market came back to the same low, when the market opened 8:30 open, you can see right here, market came back, it bounced right on the liquidity zone right here. That means anytime the market moved to the extreme, because when the market moved, this is the range from here to here, this is the range. But when the market came back to the other end of the range and then bounce, that's a great way to enter, because market already sideways, it is bouncing on the low of the day already. For you, when you see two liquidity zones, keep your stop below and then take the long trade, because this way you're able to find out exactly what is the failure point. That means you can take the less risk for the trade. So even if you take the trade, you have almost from like 49.80 to 50.40. That's a almost like 60-point move right there. But we're talking about the market manipulations. I want you to see right here, this place and then this place. When the market came back here, the liquidity started creating, because there was liquidity from the morning in this strong level. This was the strongest level. It is creating a liquidity. It came back, grabbed the liquidity, went back to the range again, came back down, grabbed the liquidity, and then went back. That's why it's like liquidity sweeps. Immediate reversal after the sweep is a great way to enter the trade. That too, when you see it came back, take the liquidity, and then price action is changing, that means you can take the trade with a very minimal risk. Stop here, entry here, you can take the trade. But look at this particular one. From there the market moved. Okay, but the most important thing is that a lot of traders struggle to enter the trade. When the moment they saw like market moving crazy, they don't know whether it's going to come back or bounce, high volatility. A lot of traders entered even late. Look at the swing. It had within a minute, it moved from 5300 to almost like 50 to 100 point swing in a matter of like seconds. Do you think how many traders would have get stopped out? But I want you to look at this one particular information on this liquidity zone. This is why you really need to trade with liquidity zones like level data. Look at, watch this. Price went back, right? It went back, it pulled back, right? And then went back again. When it went back again, a lot of traders entered. You see a lot of liquidity created. Even the lines are printing right here, not after, right here. That means came back down, went back up, lot of liquidity started creating. That means a lot of traders enter the trade. What happened? It came back down, swept the liquidity. Look at this spot. When the liquidity started creating, same place, red became the green, and then people take the trade. It came back down, liquidity swept, took out all the traders were entered the trade a little bit late, and then market moved back up. Not only that, that is a great one, because anytime you see the liquidity sweep opposite direction of the trade, the trend, that's a great way to look at this. Look at here, right here. Okay, so this is what we call as market manipulations. Happens every single time. So market moved back, right, and then it came back down. Moment the price started going back again, people thought this is like lower, higher low. A lot of people enter the trade, place a stop right there below the swing. Do you see that right there below the swing? That means a lot of traders saw the price came down and then going up, and then assumed it's going to go back further. They entered the long trade. Where did they place a stop? Right here below the swing. perfect manipulation by the market makers. Look at that. Came back down, swept the liquidity, and then moved. Isn't that crazy? If you if you practice well, just watch this kind of like a create market makers are manipulating the price action to create the liquidity, and then immediately taking the liquidity. This combination, creating the liquidity and then taking the liquidity, that means they are tricking the traders to enter the trade and then come back down, taking the stops. That's a market manipulation. If you're able to find those opportunities, one here, two here, and then every time they make a move on that context. So this is why I'm telling you in terms of, if one thing that you need to learn how the market makers work, how the market makers manipulate the market, how the price action, how they are tricking the traders to enter in a certain way, and then they know where they're going to place the stop, and then they go back, take all the stops, all the limit orders, and then move in the direction. So if you'd have taken this kind of setups, you would have had a lot of very good points today. That's why I wanted to show you, even the crazy day, market makers are able to manipulate you very well. Hope you enjoyed it. If you have any questions, anything, leave it in a comment or email us at info@buysideglobal.com. You have a great day.